Markets head into Wednesday with macro price action still dominated by geopolitics, inflation sensitivity, and central bank recalibration, with a mildly defensive tone prevailing as the dollar firms, oil remains elevated, and U.S. equity futures lean cautious. The dominant driver remains the Iran blockade story and broader Gulf supply risks, which continue to keep an energy risk premium embedded in crude and reinforce concerns around inflation persistence, just as markets head into major central bank event risk. In FX, the firmer dollar has come alongside some pressure on pro-cyclical currencies, with the Australian dollar underperforming after a mixed inflation report in which headline CPI accelerated but softer core readings tempered expectations for a more aggressive RBA response. The yen has been influenced by a mix of thinner liquidity, intervention sensitivity, and ongoing skepticism around how much the Bank of Japan can support the currency despite its hawkish bias, while the euro has been relatively steady as markets weigh sticky inflation dynamics against a softer growth backdrop and await clearer policy signals from the ECB and Fed. Overall, major FX remains driven less by domestic stories in isolation and more by the interplay of oil rate differentials and geopolitical risk. Across broader macro, oil remains a key transmission channel, with reports of an extended Iran blockade and a large private crude inventory draw reinforcing supply concerns, even as price action has remained orderly rather than disorderly. That has kept inflation risks in focus globally, with markets increasingly viewing higher energy as complicating factor for central banks from the Fed to the ECB and beyond, while equity sentiment has stayed relatively resilient but more selective as investors balance earning support against higher for longer policy risks. Looking ahead, focus turns squarely to the Fed decision and Fed Chair Powell's messaging, with markets watching whether policymakers lean more hawkish in response to energy-driven inflation risks or strike a more balanced tone supportive of risk sentiment. Beyond the Fed, attention also remains on European inflation signals and the broader implications of elevated oil for policy expectations, with the macro tone still defined by whether geopolitics reinforces the inflation narrative or whether central banks succeed in keeping markets anchored. That's all for now.